The money in your bank account, it's actually not there at all. And no, this is not an assumption, and it is definitely not a conspiracy theory, never was. If tomorrow everyone went to their banks and tried to withdraw their money, the entire system would collapse, and it would collapse within hours. Because the truth is very simple. That money we see is not actually there. This is not a mistake, not a system error either. This is how the system itself works. It's so old, so deeply rooted, that we stopped asking questions, we just accepted it. This system is called fractional reserve banking. And this system is the silent engine behind global debt, inflation, and what we think of as wealth. And when you understand how this system works, you realize an uncomfortable truth. Money is built on promises that can never fully be kept. To understand this system, we need to go back. Before applications existed, before mobile banking, before the numbers we see on our phone screens, let's go back to medieval Europe. Back then, money was simple: gold, silver. If you were wealthy, you had coins in a chest, or valuable items you could trade with others. But there was a problem: carrying gold was not safe, so people did what made the most sense. They gave their gold to goldsmiths, people who had secure vaults, and in return they received a receipt. A simple sentence: bring this receipt and take your gold. Then something strange happened. People stopped using gold. They started using the receipts instead. Because why carry heavy gold when a piece of paper represents the same value? And everything changed right here. The goldsmiths noticed something. Almost no one came to withdraw their gold at the same time. Out of 100 people, maybe 1 or 2 would show up, which meant most people's gold just sat in the vault, untouched. And the goldsmiths had an idea, a very profitable idea. They started issuing more receipts than the gold they actually had. If they had 1,000 gold coins, they could write 2,000 receipts. And those extra receipts, they loaned them to people with interest. So the goldsmiths were making money from gold that didn't even exist. And as long as not everyone came at the same time, no one noticed. This was money created out of thin air, and this changed everything. Because the moment people accepted paper as valuable as gold, money left reality. This is how the banking system was born. And by the 17th century, countries also joined this system. In 1694, the Bank of England was established, not for the people, but to solve a problem. Countries were drowning in debt, war after war, expense after expense. Banking stepped in. It lent money to governments, more than what it actually had. And in return, it took interest. So who paid that interest? Not kings, not the wealthy, the people, through taxes. Does this sound familiar? Because in reality, nothing had changed. Countries still borrow money that doesn't exist. And future generations still pay for it. The United States followed the same path. Early banks issued banknotes backed by gold, but banks quickly realized something: they could print more. And in some cases, people noticed. There were bank runs. People rushed to withdraw their money, and they saw this: their money wasn't there. Banks collapsed overnight. So what did countries do? Did they remove the system? Of course not. They protected it. They created central banks to keep this system alive. Their message was clear: even if the money isn't real, we will make sure people believe it is. Now let's bring this to today, because this system might sound unreal. Think about this. You deposit $100 into a bank. You think the money is sitting there, safe, waiting for you. But banks don't keep all of it. They keep a small portion, let's say $10. The remaining $90, they lend it out. That $90 goes to another bank. That bank keeps $9 and lends out 81. This system continues again and again and again, and your $100 turns into nearly $1,000 in the system. But the real money? Only a small part. The rest is debt. Every piece of money in the system is someone's debt. Money that must be paid back with interest. And if this process surprised you, there's something even more interesting. Even this system is now outdated, because today, in the United States, reserve requirements are zero. Banks are not required to hold anything, not even a single dollar. So what limits banks? Not reserves. Rules. Global regulations called Basel. So what are these rules? If a bank takes risk, it must have enough capital. So banks no longer lend based on deposits. They create loans first, then deposits are created. Think about that. When you take a loan, the bank doesn't take money from somewhere. It creates it out of nothing. And that's why today, more than 90% of money in the system is not physical cash. It is money created by banks, money created from debt. And this system has three consequences. First, inflation. As money increases, its value decreases. Second, unlimited debt. Because money is created as debt, there is always more debt. Third, power imbalance. Banks earn interest on money they never actually had. Countries use this system, and while asset owners gain, workers fall behind. So what happens when the system breaks? Reality comes out. 1929 and 1930. Different crises. Same story. Too many promises, not enough reality. And in every crisis, the system gets saved. Because without this system, the world would stop. And here's the uncomfortable part. The system needs people. It needs you to borrow, to spend, to trust. Because if everyone pays off their debt, the system shrinks. Money disappears. People are not just part of the system. They are what keeps it alive. And this is not new. When trust disappears, everything disappears. What should you take from this? Money is not wealth. Real wealth is assets, skills, knowledge, independence. Debt is not neutral, and inflation is not random. It is part of the system. Does this mean disaster? Maybe not. But it shows us this: you need to think differently, because holding money is not building wealth. Blindly trusting this system is not freedom. Understanding it is freedom, because once you see the system, you can no longer ignore it. And maybe this is the most important point. This is not just history, this is a warning. The next time you look at your bank account, think about this. Most of that money is just a number. Understand the system. And you can protect yourself in a game where the house always wins. If this gave you a new perspective, subscribe. To master the future, you must understand the past. See you in the next chapter.